CC Coin, also known as Canton, has been under pressure today as it trades around 6 cents, sliding nearly 15% in the last 24 hours. This sharp correction has caught the attention of traders who've been watching the token's volatility over the past week. While the drop looks heavy on paper, the sentiment around CC Coin hasn't completely turned bearish. Instead, the pullback feels more like a reset after its recent bursts of momentum. A lot of the ongoing conversation in the community centers around the Canton network's growing list of institutional partners and the larger goal of building permissioned blockchain infrastructure for regulated financial markets. Even though today's price is struggling, the project's fundamentals haven't changed, and several analysts are still highlighting the long-term role Canton could play if traditional institutions continue to warm up to tokenization and interoperable blockchains. Over the past few days, there has been renewed discussion about the network's pilot tests with real-world assets, which some investors think could become a major narrative driver over the coming months. The broader market has also been choppy, with large-cap cryptos swinging more aggressively than usual as traders rotate between speculative plays and defensive positions. CC Coin's decline seems partially tied to that environment, especially since mid-cap infrastructure tokens tend to take the biggest hits during short-term volatility. Liquidity has thinned slightly, and that alone can amplify downward moves, but what's interesting is that whale wallets haven't been exiting heavily, a sign that the pullback might be more technical than fundamental. Looking forward, CC Coin's future targets will depend heavily on whether the project can keep strengthening its ties with the real-world financial sector. If tokenization of assets continues gaining traction globally, Canton stands to benefit more than most because its entire architecture is built around regulated, permissioned environments, something banks and institutions require. In bullish scenarios, analysts consider a return to the 10 to 12 cents range possible if market sentiment flips and adoption catalysts arrive. A more extended bullish cycle could push the token back toward its previous highs, but that depends on macro conditions, liquidity returning to mid-cap projects, and real development updates coming to life. For now, CC Coin is in a cooling phase, but it doesn't feel like a project in trouble. Instead, it looks like a token taking a breather while waiting for its next narrative spark. Traders in the US are keeping close watch, especially those who see CC Coin as a long-term infrastructure play rather than just a quick trade. If the market stabilizes and the Canton team delivers on upcoming milestones, today's dip could eventually be remembered as one of those temporary corrections before a fresh round of movement.